Okay, so imagine this for a second. It's January 2026. The future is here, but it's messy.
Very messy.
Because on one side of the world, you've got protesters in the streets of Iran using Bitcoin as a literal lifeline.
It's the classic crypto as a shield use case we always talk about.
Exactly. It's a tool for freedom, a way to opt out of a collapsing currency, out of a surveillance state. But then you just spin the globe. You look over at China, at Saudi Arabia, the UAE, and what are they building?
The exact opposite.
Massive, high-tech digital systems designed for total centralization, for bypassing the U.S. dollar completely.
It is the ultimate contradiction of our time. I mean, you're seeing the technology of money literally split into two different directions at the same time.
Right.
One path leads to, radical individual autonomy, and the other path leads to absolute state efficiency and control.
And that is exactly what we are unpacking today. We have a huge stack of sources here, a really comprehensive market and geopolitical analysis from January 19, 2026.
Yeah, and this isn't just about price charts, though we definitely have those.
No, we have plenty of those.
Okay.
But this is about connecting a, $3 trillion market cap to the boots on the ground in the Middle East and the boardrooms in Asia.
The mission for this deep dive is really to connect those dots. We get so lost in the daily noise of price go up, price go down,
Right. Which token is mooning?
Exactly. But the source material today, it paints such a vivid picture of a real structural shift. We're looking at the tension between decentralized freedom, what Bitcoin offers, and that centralized control, which is where these state-run digital currencies are all headed.
So let's start with the raw numbers just to get our bearings. The market pulse, if you will.
Good place to start.
Because before we get to the geopolitical chess game, we need to know what the board even looks like. The source data puts the global crypto market cap at a staggering $3.32 trillion.
Which is just a massive number. To put that in perspective for you, that's bigger than the GDP of entire G7 nations.
Wow, like France or Canada.
Yeah, and it showed a modest 0.3% increase over the weekend.
And the king, Bitcoin, is sitting pretty at $95,388. It's dominating.
Still dominating. About 57.6% of the total value, with Ethereum trailing at around $3,340?
But here's the thing that caught my eye in the data. There's something a little weird happening with the ETFs.
Like exchange-traded funds. This is where the big institutional money flows in, the pensions, the hedge funds.
Exactly. So you'd expect them to be buying if the price is holding this high. But the data shows a significant outflow.
A big one.
$390 million in just 24 hours.
$390 million leaving the building.
No, that feels contradictory, doesn't it? If everyone's selling, why isn't the price crashing down?
Well, it raises a few questions. When you see outflows like that, while the price stays pretty stable, it usually signals one of two things.
Okay.
Profit-taking, or just a shift in risk appetite. The market sentiment score in the report was sitting at neutral, a 49 specifically.
A 49. That is smack in the middle. It's like the market is just shrugging its shoulders.
It's painful neutrality. I think everyone's just waiting for the other shoe to drop. Investors might be cashing out some gains, from the last rally.
Sure. I mean, a Bitcoin near $100 is historic territory.
It is. Or they might be rotating capital somewhere else. But it's a warning sign. It says that institutional appetite might be pausing to take a breath.
Speaking of pausing, let's talk about the fuel for this engine.
Yeah.
I always think of stablecoins Tether, USDC, as the dry powder.
The money sitting on the sideline.
Exactly, just waiting to buy something. The report called the volume of stablecoins dreadful.
It's a harsh word, but it's accurate based on the data. Tether volume was only around $48.8 billion.
Which, to me, sounds like a lot. I mean, $48 billion is a fortune.
In the real world, yes, absolutely. But in a $3.3 trillion market context, it's kind of a drop in the bucket. The analysis suggests that for Bitcoin to really push for a new all-time high, to convincingly break past that $100,000 barrier, you need that stablecoin volume to be closer to $150 billion.
So the tank is only about a third full. We're trying to drive up a huge mountain with the fuel light blinking.
Precisely. Without that liquidity ready to go, it's just really hard to sustain a massive rally. But, we shouldn't ignore where the rest of the value is hiding. The proof-of-stake ecosystem is huge.
Right. This isn't just a Bitcoin show. We've got Ethereum, obviously, but look at the others. Binance BNB is at a nearly $130 billion market cap.
Solana's at $80 billion. And don't forget Tron at $30 billion and Cardano at $14 billion.
So what does that tell you? Because those aren't just digital gold.
No, they're digital infrastructure. This shows that while Bitcoin is the store of value, there are hundreds of billions of dollars locked into these smart contract platforms.
So investors are still betting big.
They're betting heavily on the utility of these networks, on the idea that the future financial system will be built on top of these chains. It's a diversification of value.
Okay, so the market is huge, but it's hesitant. The tank's low in gas, but the infrastructure is expensive. Now I want to take this down to the ground level.
Let's do it.
We have a report here from Chainalysis about Iran. And this is where the story gets really human and really, really complicated.
This is one of the most fascinating parts of the source material. The Iranian crypto ecosystem hit, what, $7.78 billion in 2025?
But it's being used for two completely opposing purposes at the exact same time.
Talk about a dual-use technology.
On one hand, you have the government. The report mentions the IRGC, the Islamic Revolutionary Guard Corps. They control something like half the Iranian economy.
A staggering amount.
So how are they using it?
Well, they're using digital assets specifically to fund their operations and to evade international sanctions. This is the scary side of crypto that regulators always warn about.
A dark side.
Yeah. If you're cut off from the global banking system, if SWIFT kicks you out, Bitcoin provides a way to move value across borders without asking for permission.
So for the state, it's a sanctions evasion tool. But then you flip a coin, the report highlights that civilians, just regular people, are withdrawing massive amounts of Bitcoin to their own personal wallets, specifically during times of protest.
That is the freedom signal. I mean, look at the context. The Iranian rial has been collapsing for years. Inflation is out of control.
So holding real means your life savings are just evaporating.
In real time. So Bitcoin becomes a flight to safety.
It is literally protest money.
It validates the entire original ethos of this stuff, right? The separation of money and state. When the state's money fails, or when the state turns on you, a decentralized asset becomes a survival mechanism.
And the data backs it up.
Completely. Okay. The source notes these withdrawals to personal wallets spike exactly when unrest hits. It's people voting with their wallets, quite literally, to opt out of the regime's control.
Which leads to this terrifying what-if scenario they mentioned. What if Iran didn't have Bitcoin? What if they had a central bank digital currency, a CBDC, fully up and running instead?
Oh, if that were the case, the situation for protesters would be unimaginably different. A CBDC isn't just digital money, it's programmable money.
So if I'm at a protest, the government could just, turn my wallet off?
Theoretically, yes.
Yeah.
Or they could automate fines directly from your account the second you're identified. They could freeze the accounts of known dissenters instantly.
They could even restrict where you spend your money.
Geofencing your funds so you can't buy a bus ticket to leave the city.
You're describing a digital prison.
If Iran had a fully functional CBDC, that flight to safety just wouldn't exist. You'd be locked in a burning building with no way out.
That is a chilling thought. And it is the perfect segue to our next topic, because there's a massive alliance forming specifically to build that exact infrastructure. Let's talk about mBridge.
This is the heavyweight champion of CBDCs right now. mBridge is a project with the central banks of China, Hong Kong, Thailand, the UAE, and Saudi Arabia.
And the numbers are serious. The platform has already processed over $55 billion in cross-border transactions.
That's not a pilot project anymore. That's a functioning economy. And the goal is explicitly stated in the analysis. Build parallel payment rails.
Parallel to what? The US dollar.
Exactly. For decades, the US dollar has been the world's operating system for trade. If you wanted to trade oil between, say, Saudi Arabia and China, you usually had to settle in dollars.
Which means the transaction touched US banks, which gave the US government oversight.
And mBridge changes that. It allows these nations to settle trades directly, using their own digital currencies, completely bypassing the US banking system.
It's an atomic swap. Digital yuan for the digital dirham.
Precisely. And there was a really interesting detail in the source about the BIS, the Bank for International Settlement.
Right, the central bank for central banks. They actually stepped back from this project in 2024, didn't they?
They did. That was a huge signal. They pulled back because of sanctions concerns. But here's the kicker. The project didn't stop.
It grew.
It grew rapidly without them.
That feels significant.
Yeah.
The adults in the room walked away, and the party just got bigger.
China, especially, is pushing this hard. Their domestic digital yuan, the ECNY, has seen 3.4 billion transactions.
Worth how much?
Worth $2.4 trillion. And they're adding features like paying interest on balances. They're making it sticky.
So while Bitcoin is offering freedom from the state in Iran, mBridge is offering nations freedom from the US dollar, but through absolute state control.
It's a clash of titans. Decentralized networks versus state-run networks.
Okay, let's zoom in a bit. We've talked about nations. Let's talk about corporations, because even in 2026, the market has its own internal drama. We have to talk about Ondo Finance.
Ah, yes. The token unlock. This is a classic crypto market mechanic that often burns retail investors.
You know, token unlock sounds like a good thing, like you're unlocking a prize. But it's usually not, is it?
Chuckles. Usually not for the price, no. So, on January 17th, Ondo Finance had a massive unlock. $737 million worth of tokens suddenly hit the market.
For the listener who doesn't follow this stuff, what does that actually mean?
Well, when a project launches, the early investors, the big VCs, the founders, they get their tokens for super cheap. But there's a catch. Their tokens are locked up for a year or two. They can't sell.
Until the unlock date.
Right. And for Ondo, that lock just expired for huge players like Pantera and Founders Fund. So suddenly you have $737 million in new supply that can be sold.
And basic economics kicks in. Supply goes way up.
And if demand doesn't match it, the price goes down. Or even just the fear of them selling drives the price down. The source noted the Ondo token was already down 68% from the previous year.
So this is just more weight on top.
It's a heavy weight, a reminder that these markets are still driven by these internal mechanics.
It's the scary, volatile side of crypto finance. But then you flip the page in the report and you see Formula One.
The glamorous side.
Nexo, a digital finance platform, signed a huge multi-year partnership with the Audi Revolut Formula One team.
This is significant. Audi is entering F1 in 2026. This isn't just a logo on a car, it's a signal that digital assets are becoming a standard part of high-performance sports branding.
It legitimizes the industry.
Absolutely. And it's just fascinating, right? You have one company struggling with these deep, technical token supply mechanics.
And another one is slapping their logo on one of those expensive billboards in the world, an F1 car. It shows the real duality of the industry.
It shows maturation. We're moving past just internet money into global branding and complex finance, for better and for worse.
So since we're diving deep into the geopolitical side, we have to look at where a lot of this capital is flowing. The Middle East isn't just buying Bitcoin. They're trying to build the infrastructure of the future.
The UAE and Saudi Arabia are making massive moves. Let's start with the UAE. We saw a memorandum of understanding signed on January 15th, 2026, between Zan Bank and the Digital Climate Group.
Okay, Zan Bank is a fully regulated digital bank, but Digital Climate Group, that sounds like they're focused on sustainability.
Yeah.
The source says they're doing RWA tokenization. Break that down for us.
Real-world assets. They're tokenizing things like private credit, infrastructure projects. Their strategy is brilliant. They're connecting capital from Japan and Asia with investment opportunities right there in the Middle East, but they're doing it all on blockchain rails in a fully regulated environment.
So instead of a slow bank transfer and piles of paperwork to invest in, say, a Dubai solar farm.
You just buy a token that represents a share of that project. It's faster, it's more transparent, and it opens up the market to global liquidity.
And then you look next door to Saudi Arabia. They're funding a company called Resquad AI.
Just $1.5 million in seed funding, but the claim here is wild. They say they can reduce hiring timelines by 99% using large language models.
99%. That sounds like a marketing pitch that's a little too good to be true.
It is a bold claim. But look at why they're investing. It aligns perfectly with their Saudi Vision 2030. They're trying to shift their entire economy from oil-based to knowledge-based.
They need talent, and they need it fast.
Exactly. So investing in AI-powered recruitment is a strategic move to accelerate their national transformation. They're using their capital to solve a major labor bottleneck.
It's incredible to watch. They're just consumers of tech anymore. They're trying to become the hums for it.
Definitely.
Okay, I want to get to the real meat of the discussion here. The source material had this really intense debate, almost a philosophical standoff. They called it the autocrat's dilemma.
This was my favorite part of the analysis. It was all centered around a hypothetical North Korea scenario.
And the question was this: can an autocratic leader force the adoption of Bitcoin as easily as they can force the adoption of a central bank digital currency?
It seems like a simple question, right? If you're a dictator, you just issue a decree, use this or else.
Right. So the argument for yes, they can was pretty straightforward. The source argued, look, adoption is just infrastructure. If an autocrat says, effective February 1st, every shop must accept Bitcoin, people will do it.
We saw El Salvador do it, and while they're obviously not North Korea, it proves the government can force the issue.
If the leader says, download this wallet, people download the wallet. So functionally, you can force adoption.
But the expert in the source pushed back hard, and I suspect you might agree with this point.
I do, because adoption is not the same thing as control. And that is the nuance that changes everything.
Go on.
Sure, an autocrat could force everyone to use Bitcoin, but he cannot control the Bitcoin network. That is the key difference.
With a CBDC like the digital yuan, the leader controls the issuance. He can print more. He can freeze your specific wallet if he doesn't like what you said. He can program the money to expire.
He's the admin of the entire system.
He is the admin. But with Bitcoin, the leader has zero control over the supply. He cannot freeze a wallet at the protocol level. He cannot stop a transaction between two people if they have an internet connection.
So if a dictator forces his population to use Bitcoin,
he is technically forcing them to use a type of money that he can't manipulate. He is handing them a tool that inherently resists his own regime.
and that's the irony. By forcing Bitcoin adoption, they're accidentally giving their citizens financial sovereignty.
Exactly. You can mandate the usage, but the technology itself undermines the autocrat's power. A CBDC reinforces it. That's the fundamental difference.
It really just highlights why mBridge and the digital yuan are so attractive to these regimes and why Bitcoin remains the tool of the protester in Iran.
One is a cage, the other is a key. That's a perfect analogy. And the autocrats aren't dumb. They know Bitcoin is a Trojan horse for freedom. That's why they're so busy building their own rails.
So let's wrap this all up. We've gone from a $3.32 trillion market cap to $390 million in ETF outflows, all the way to the streets of Tehran where crypto is, keeping hope alive.
And we've seen the rise of this anti-dollar alliance with mBridge processing billions, while corporate crypto deals with insane volatility on one hand and Formula One sponsorships on the other.
It feels like 2026 is the year where the lines are finally being drawn. It's not just crypto versus fiat anymore.
No. The real story, the big story of 2026, is this structural battle between parallel rails, state-controlled, efficient systems like mBridge, and freedom money, which is these decentralized, uncontrollable assets like Bitcoin.
Both are digital, both are fast, but one serves the state and the other serves the individual.
And that middle ground is disappearing. You're going to have to choose which system you want to operate in.
So here is the thought we want to leave you with today. We talked about mBridge growing rapidly, supported by China, Saudi Arabia, the UAE. If mBridge actually succeeds, if it removes the US dollar from the equation for global trade, if oil starts getting settled in digital yuan, what happens to the global economy?
Does Bitcoin become the new neutral reserve asset that everyone trusts because nobody controls it? Or does the world just fracture into two completely separate digital banking systems that can't even talk to each other?
The splinter net of money. Something to think about as you watch the charts. That's it for this deep dive. Thanks for listening.
Stay curious.